Hello, everyone. Welcome to today's webinar with me, Fawad Razaqzada, market analyst with Think Markets, and my colleague Victor. Hello, Victor.
Hello, Fawad. Very happy to join on this very busy week and a crucial week for the markets.
Absolutely.
Let's get this ball rolling. These webinars are for general information only and are not intended to provide trading or investment advice or personal recommendations. Any information relating to past performance of an investment does not necessarily guarantee future performance. Think markets shall not be responsible for any loss that you incur, either directly or indirectly arising from any investment based on any information in this webinar. Please remember that spread betting and trading CFDs carry significant risks and may not be suitable for all investors. With this disclaimer out of the way, we basically want to share with you that the information that we state here is not intended to advise you on how to trade and what places, what assets to trade, and what direction. So be mindful of that. And let's get into it. How's the calendar looking, Fawad?
Yeah, it's as you said, it's looking quite busy. We have some 20 major central banks making policy decisions this week. Basically, the whole world is making policy decisions. And on a side note, it's why you tend to see the dollar top or bottom around the start of the year or in the first quarter of every year. It's because you have major policy decisions that tend to be announced at the back end of the year that's about to end, which is, in this case, it's 2021. We'll start with the Federal Reserve on Wednesday. And then after that, we have the Swiss National Bank, the Bank of England, and then you have the European Central Bank, all on Thursday.
Yeah.
In terms of the major ones, obviously we have the several other major banks that are not listed here. For example, the Turkish Central Bank, who will likely cut interest rates again. And then you have the Bank of Japan on Friday. Indeed. We have written a preview for these webinars. If you go to, Think Markets, go to market analysis for these central bank meetings, I should say. Go to market analysis, and here you will see that we have provided a preview for the central banks, either in this one and the week ahead report, and there's some more detail in my latest report. If you click on this one, you will see more detail on the major banks meeting this week. We have the XNB as well. CBRT on Thursday. So please have a read through that. I think it's going to provide you some useful information. But insofar as the markets are concerned, we are seeing very little volatility in the dollar, which is not a major surprise. However, all the other major markets have been quite volatile, including the stock markets, which have turned sharply lower. We've seen wide swing in some cryptocurrencies. Today, there was, I don't know if you heard about Dogecoin. Elon Musk announced that they're going to accept payment for Doge, with Dogecoin for its products. That shot
for some merchandise. So you can buy it. So you can buy a Tesla hat with Dogecoin. Great, yeah.
Right.
That sounds very useful.
it's not for the main product that they're selling, is it? For the car.
it's a bit far from it.
Right. So I didn't quite read that properly then. Anyway, we'll start with the FX, yeah.
It was enough to cause a 20% spike over 5 minutes or something.
That should have wiped out the entire losses then. Let's since we're talking about it, let's just quickly look at Dogecoin, and then we will.
Let's start with the most important aspect. I agree.
So here it is. This is the spike on the daily chart. Still looks quite small relative to how far it's fallen from its highs. So it's
Yeah,
not a game changer by any means, but you have some um, kind of fundamental driver behind it today. So
yeah.
at least it's not just a technical move.
A tweet
Um, yeah,
from the emperor himself.
himself. So let's see if it will be able to get past this trend line before it starts to look more interesting. Right now, it's still making lower lows and lower highs. It
No,
has
what's
broken
funny, I recently had a chat just yesterday with a friend who were like, "Are you shorting cryptocurrencies?" I was
yeah,
like, "Well, it's very difficult to short cryptocurrencies because
absolutely.
you can get killed in
In an
five
instant,
minutes."
yeah, yeah,
So there you go. This is what happens if you
yeah,
try to short Dogecoin at the wrong time, and
yeah.
you can just get killed in seconds, really.
I suppose that's the case with most markets, but yeah, in particular cryptocurrencies because of these kind of
Yeah, it's
spikes.
just
Yeah,
much easier to move
yeah,
23%.
yeah. So that's the Dogecoin for you. Since we are talking about cryptos, let's just wrap this up quickly, and then we'll
Yeah,
talk about the more important markets so far as this week is concerned. Anyway,
yeah.
uh,
Bitcoin is looking dire,
yeah,
continues to look dire, in my view, at least.
yeah, I agree.
It's still consolidating around the 200-day moving average.
Yeah,
However, we haven't seen a decent bounce for a while,
yeah,
and feels like yeah, if you look at the weekly and the monthly charts,
yeah.
they're looking really, really, really bad.
Right. This is
So
the weekly chart of
yeah.
Bitcoin.
Yeah,
I've got so many
weekly,
levels.
I mean, yeah, there is obviously some support around these levels
Yeah,
currently, around 47,000, I guess.
sure.
But yeah,
Right where we are at the moment, I've highlighted this on the daily chart as well. You see this downward candle that happened before the
yeah,
takeoff previously. This is like a demand zone, if you like. And we've had a couple of stabs try to break through this in the last few couple of weeks. So far, it's holding
yeah,
firm. So it's possible we may see Bitcoin bottom out here. But if it starts to go below 40,000, then that would look really scary, I would say, because
yeah,
that would mark a new low below the most recent significant low of the exact level was $39,860.
What about Ethereum? Does it look any different?
Let's have a look. Where is Ethereum? Oh yeah. I mean, it's not gone down as much as Bitcoin in terms of in percentage terms anyway. Um,
Yeah,
but nevertheless, it
but
too is
technically
looking.
look the same.
It does, yeah. I mean, it had um, previously it was holding above the 4,000 level here, but in recent in recent trade, it's kind of gone below. So yesterday, it broke cleanly below it, and therefore took out this bullish trend line as well. So it too is holding below levels that should have held, but are now broken, meaning that the path of least resistance is to the downside for Ethereum as well. I think overall, Bitcoin and Ethereum are the more likely candidates to find a bottom soon because of their sound fundamentals and the fact that that they were kind of the first movers. Um, but you have to see that reversal stick first before turning bullish on this thing.
Yeah.
So far, we haven't seen it. For me, I think a break above, yesterday's high would be a reversal now, because yesterday, this thrust candle that broke the 4,000 level. There's no reason now for price to go back above it if the trend is still bearish. So therefore, if it goes back above the high of the previous day's candle, for me, that would mark a turning point in the trend.
Right.
Right. Let's now go on and look at some of the other markets. I will start with start with indices because we've seen some weakness come in here, especially for technology companies and meme stocks like AMC, etc. They have fallen quite sharply because risk has taken a turn to the downside, risk appetite, and it's in part because of concerns over Omicron variant of COVID, which has caused a bit of a panic in the markets, I would say, and also the fact that there are concerns that the Federal Reserve is going to tighten its belt, despite concerns over the new variant of COVID, and in spite of inflation being quite high. What's the US inflation
Or
at the
rather,
moment?
because inflation is too high.
Because inflation is too high, yeah.
Yeah.
It's at its highest level since 1982, before I was born.
Yeah, this is crazy. I mean,
Yeah.
inflation figures have. I saw that 25% yesterday in the New York Fed survey about inflation expectations.
Yeah.
Those came out at around 6%.
Right.
We're speaking about a year ahead here.
Wow. Okay. So that means
And
it's gonna stay elevated. Most
so
likely.
yeah, the consumers expect inflation to remain around 6%.
Yeah.
And at the same time, you have 25% of survey respondents who expect 10%.
Wow.
How about
That's
that?
huge. That's
I
huge.
mean,
10%.
I think it speaks volumes about the difference between the numbers that are on the street and the ones that are being published by the statistical offices around the world.
Yeah.
Because people are experiencing inflation that is much higher than what central banks are saying.
Yeah.
And this is turning into a vicious cycle in which consumers expect higher and higher inflation in perpetuity, basically. So nothing good about that.
Yeah, so the Fed has to be responsible, you would imagine, and they would have to
Too
kind
late for that.
they would have to reduce asset purchases and do so very fast. So that means that on Wednesday, I'm fully expecting the central bank to do something like that and announce that the bond purchases program is going to end in the next couple of months. Whether or not that will lead to an earlier rate hike in 2022 remains to be seen. I mean, a lot can change in the next few months. You have inflation, as we mentioned, is skyrocketed recently. But because of coronavirus coming back strongly.
What would be interesting is to see labor force participation rate tick up. Because what I feel like is currently happening is that way too many people are feeling rich enough to avoid working. Like they made a killing on the stock market, and they're just they're just waiting out, and they don't really need to go to work. And
so anyway,
I don't know. But
yeah,
it feels like there is that.
Absolutely, yeah.
But anyways, getting back to the charts, we have seen this bounce in the Nasdaq after the Omicron scare fade. It was pretty harshly met with selling yesterday. That rally, that the recovery from the Omicron scare has been, the gap has been filled, And now the market is turning lower again. It seems like it's it seems like it's about to go even
Yeah.
lower. I don't know. That's
Yeah,
how it seems to me.
it
I'm
does.
not
Yeah.
saying anything, but yeah.
It's so, if you think about technology stocks, they have been the most the hottest kind of sector since everything
Yeah.
bottomed out last year. And
Yeah.
technology is really expensive at the moment, and people are getting scared about the high valuations that technology stocks carry. And with the Federal Reserve likely to tighten monetary policy, um, and you're seeing insider selling. Elon Musk, we've spoken about him. He has sold lots of Tesla shares. Um,
Jeff
you know,
Bezos has also sold a lot of Amazon shares.
exactly.
So yeah, I mean the richest people in the world are
The
selling their
richest and the
stock.
smartest, yeah, they're selling.
Yeah.
So when you see insider selling like that, you have to take notice. And I think the market is starting to take notice of
Yeah, at
that,
the
and it's
same
kind of
time, we have record corporate buybacks.
yeah,
So it's really funny. Like
yeah,
you have insiders selling to to the corporation's balance sheet.
yeah.
Great, brilliant management. I just can't I
I
can't get
can
enough of this.
can sense a bit of sarcasm in your tone. Anyway, markets are looking quite weak, and it's not just in the US. If you look at across the pond in Europe, yesterday we saw a sharp reversal in the DAX as well. We tested this zone here, which was previously support. We broke below it cleanly. Then the market kind of consolidated for a while below the 200. Then we had another crack at the prior support area, which turned into resistance. And then yesterday it looked like it was going to break higher. However, it reversed and created this hammer-like candle on the daily time frame. So it looks bearish. It's not, it's not falling really rapidly at the moment, but it's an early warning sign that we may see some further weakness, especially with this week being so busy on the macro front as well.
Yeah,
So for the DAX, I think the initial target will be around the 200-day moving average and this support area here at
right.
15,430, which was the base of this breakout. I don't know if it will go below that or if it will bounce there, but we will have a good idea if and when it gets there. And it
Yeah,
looks like it might get there either today or tomorrow. And if it does, just see what happens there. If you're bullish on the German DAX, then perhaps either look for a reversal stick in this area, or wait for the market to kind of break this gray resistance zone, and then
yeah.
buy the dips thereafter, I would say. So
Well, yeah. Alternatively, this triple bottom around 15,000
yeah,
is yeah. If that gets broken, I fear I
yeah.
fear what's gonna happen if that gets taken out.
Oh yes, ECB is gonna step in and and do what the Fed used to do, right?
Yeah, well, I don't know. I
No,
just yeah. I mean, they probably will, but
yeah,
it's beyond like we are at this point in time when the central banks have put themselves into a corner,
in a corner, yeah,
and
yeah, yeah.
if they raise rates, they're going to cause a recession. If they don't raise rates, they're going to cause a
An
depression.
overshoot
I don't
inflation,
know.
yeah.
Because inflation inevitably leads to the depression. People
Yeah,
run out of money.
yeah. Yeah, it's not looking great at the moment, the economic situation
Yeah.
in the Western world, and indeed
Oh,
in
I
some
mean,
emerging markets as well.
yeah,
Um,
I wouldn't say only in the Western world because,
well,
um,
we know the situation was bad for most emerging markets before, and obviously the third world, if we're allowed to use that word, poorer regions of the world, they were already not doing very well during the pandemic. But we
yeah,
saw a big recovery in the economies of the developed nations, but we're now seeing really high levels of inflation across the board in these nations. So
Yeah.
that's what I meant. Yeah. So yeah, it's weakness across the board. Can central banks come to the rescue? Remains to be seen. As we shift our focus to the forex markets now, and starting with the dollar index. Now, interestingly, the dollar has weakened, Victor, and it has struggled to
I
rise.
feel like
Mm,
so let me share what my thoughts are on the dollar
sure.
currently. We are just into the Fed meeting. We're seeing these lower highs
Moderately
and
lower highs, yeah.
yeah, very shallow
Yeah,
and very tight range in the dollar overall
sure.
for the past 4 weeks. So what's going on here is that the market does expect the Fed to tighten, but
Yeah.
it also, I think, expects that this will be a mistake.
Uh-huh.
This tightening is going to be a mistake, which eventually is going to cause the Fed to reverse course.
Right.
So yeah, I think that if you look at the bond market, it's
Sure.
already pricing that in, like it's pricing in that this policy move will cause yields to actually get lower. So
Let's have a look.
uh, yeah,
Yeah.
10-year yields, daily chart, we have reached 1.7%. As the Fed started talking about faster tapering.
Yeah.
And since then, we have pulled back to 1.44. I mean, something's going on here. The bond market
Mm,
either knows something that we don't, or, it's just speculating that the Fed is
yeah.
going to make a mistake.
Yeah.
So, yeah, I mean, that's what's keeping a lid on the dollar, I feel. Whether it will persist, I think we will know tomorrow evening after Jay Powell's press conference
Yeah.
and his latest cues as to what the Fed plans to do, and see if the market can return, like if the bond market's confidence returns that the Fed, that the economy can handle higher rates,
Yeah.
the dollar will continue marching higher. If that doesn't happen, though, I don't see the dollar sustaining this rally that has happened over the past several months. So
Yeah. The trend is still there, isn't it? The uptrend
yeah,
for the
it's
yield.
still
Yeah.
intact. We're
It's just
still
a
there.
pause in that. Yeah. For now.
It's all good. Like anything can happen at this point, and that anything is going to be dictated by what happens tomorrow and what Jay Powell says and does.
Yeah. So yeah, if Powell is hawkish tomorrow, um, then I would imagine yields will break out and move back about the 200-day moving average, and that
Yeah.
at that point it would look quite bullish for yields for the dollar, and
Yeah.
not so much I would imagine for technology stocks, because rising yields are not good for assets that pay low returns or no returns at all, like gold. Um,
Yeah.
so we could see some interesting moves, to say the least, in the markets tomorrow. Should we see remember the so-called smart money is always in the bond market, and
Yeah.
what happens in the bond market is going to be very important for the wider financial markets. So do keep an eye on this, even if you don't trade fixed income. Just just
Indeed.
just watch yields, yeah, very closely.
Yeah.
You are saying that the hesitation here is just because the people don't want to um,
Well,
hold
people don't want to
positions.
get ahead of themselves before
Yeah,
the Fed, before seeing what the Fed
yeah,
actually does. So
yeah.
that's
Kind of makes sense, doesn't it?
Yeah.
I mean, if I was trading currencies, I would at least lighten up. Or if
Yeah,
I'm
yeah,
kind of
yeah. And that's
uh,
what has been happening. Like,
that's what's been happening, yeah. And CFTC data kind of shows that as well. The latest data that he saw last week showed lightening of positioning,
dollar
in
longs.
long dollars, etc. Yeah.
Yeah. Okay.
Um, but yeah, I mean, the dollar index itself, the daily chart here, if you look at recent price action, it's just coiling as on the weekly chart. It's coiling above the 21-day exponential moving average. So this could be a bullish consolidation, in other words, yeah, rather than a
Yeah.
trend reversal. Because usually when you see a consolidation near the highs, usually, but not always, it leads to further, gains.
Yeah.
Um, there's no point, obviously, talking technicals on this because it will all depend on the outcome of the Federal Reserve and indeed on the other major central banks like the European Central Bank.
Yes. However, like we don't expect that many surprises from them. Like it's
Yeah,
pretty
compared to
much
the Fed. Yeah,
widely known what's gonna happen with the ECB and
yeah,
BOE.
yeah,
Like they're gonna stay pat. They're gonna keep playing the dovish game.
yeah,
I don't see with the latest measures in the UK, I don't see the BOE returning to its more hawkish rhetoric that it had a couple of
yeah,
months ago.
yeah.
So, yeah.
So yeah, the euro kind of mirrors the hesitation that we've seen in the dollar index. And therefore, a lot of the hesitation in the dollar index is to do with the euro. As Victor mentions, ECB is probably going to be dovish, and so would you say that the euro is going to remain under pressure? If you were to kind of guess ahead
I
of the
no,
central bank
I
meeting.
actually think that we might have seen the top in the dollar.
All right. Okay.
I feel like the Fed is going to make a mistake
Right.
over Titan. So that's my thesis. I don't know where,
Mm,
but I'd like to start shorting dollars.
sure. I kind of I'm trying to think the same way as you. I just think that there might be just one further flash lower in this to take out all the longs that may have been accumulated, the early longs
Yeah. The
in
fact
the
is
euro
that
dollar.
the dollar has been rallying all year long.
Yeah, yeah,
Like you can see that 2021 starts at 122. We are now at 113.
yeah.
Throughout this year, the dollar has rallied.
Mm,
Um, I've been listening to people being short the dollar for
for the whole
most
year.
of this
Yeah, yeah,
most of this year.
yeah.
so so I think it might be time to start
Going the
going
other way. Yeah,
long now that everybody starts turning bullish because
yeah,
the Fed will accelerate its tapering.
yeah. That's very good point you made. Because coming into the year in 2021, the dollar was rising against the euro. But sorry, where were we? Yeah, in 2020, kind of from the after the first quarter of 2020,
Yeah,
the dollar bottomed out and it started to rise, to weaken.
to fall.
To fall, sorry,
Yeah,
the dollar. Yeah, so we're looking at the euro here. The dollar fell, and everyone was kind of turning bullish on the euro and all the other major foreign currencies. And it
yeah,
looked at one point that the euro dollar might be heading to 125. It came very close to that level before the dollar topped out. Before
yeah,
the euro dollar topped out, and then we've seen weakness in this currency pair as the dollar strengthened. So will we see a return of the existing trend that started in March 2020, that which was bullish for the euro dollar and bearish for the US dollar? That's what
yeah,
Victor is implying, and I mean, it's possible because if from a macro point of view, not only there's a potential that the Fed might be making a mistake, but we could actually see the likes of the ECB and the Bank of England, etc. They starting, to tighten their policies a little bit more aggressively in the middle parts of next year, or because inflation is a global issue. It's not just in the US. So if anything, there might be more pressure on the European Central Bank to tighten
Yeah,
policy.
well, I don't
Political
know.
pressure.
It doesn't feel that way for now, at least.
Yeah.
But yeah, it could happen, of course.
Sure.
The new German government
Yeah.
is getting set up. I mean, it's already a fact. So
Sure.
we're gonna have to see how. Well, the French elections are near as well.
Yeah.
So yeah, we might end up with a different structure from a political standpoint, and ultimately it is politics that dictates monetary policy, despite all the baloney about central bank independence.
Sure. All told, for what it is worth, I reckon, just finishing off on the euro dollar, there is this trend line that is going to come in play very soon.
Right.
And this goes back all the way to year 2000.
Yeah.
We met it in 2017, 2020.
Good point. Why not?
Yeah. So this level comes in at 110, which is a psychologically important level.
Yeah.
I reckon that
we could see one
last
yeah.
push into this, and then we bottom out. That is what I'm looking at. In terms of resistance, if the euro dollar continues higher into the meeting, Fed meeting and ECB, I reckon the upside would be capped in the short term anyway, around the 114.50 to 115 area, which was previously support and resistance. So we will see a resumption of the downward trend there. So those are the kind of levels I'm looking at. But beyond that, it all depends on the actions of these central banks and on the macro front as well. Let's turn our attention to the pound. The pound is kind of dropped quite sharply in recent weeks because of the Bank of England U-turn on monetary policy. They were expected to hike interest rates, but they disappointed those expectations because of partly because of the new variant of COVID coming in, potentially hurting the economy, etc. Do you reckon that they will wait now until maybe February before hiking interest rates?
Well, it appears they are pat for now. So I feel like February the earliest, if they do at all. But that it all depends on how the market reacts to the Fed tightening, and whether we're going to see this massive risk off sentiment rise across the board, and obviously that is going to cause stock markets lower, and probably the dollar lower as well, because we are ignoring, like most people are ignoring something, that the dollar is currently the carry currency. It's not the funding currency as it used to be. Last time we had a crisis in 2008, the dollar was rallying on risk off, and now when we see hardcore risk off, the dollar is not showing its strength as it used to. So something's off. So I feel like this will be the crucial aspect there.
It's worth keeping an eye on the dollar Swiss as well this week, because the Swiss National Bank is meeting. Not that they are expected to
not that the S&B will do anything.
anything, yeah. But if you look at the Euro Swiss currency pair, it's kind of getting to levels where intervention is almost becoming very likely.
Well,
it's
they
becoming
tried
really
it
expensive.
once.
Yeah. Before, for those of you who are kind of can't remember, in 2015, early parts of 2015, they dropped the 120 peg in the US.
The 120 floor.
The 120 floor, rather, yeah. Not the peg.
They used to keep because basically what was happening, every time prices went to 1 to 20, high frequency traders were buying up and selling these selling in huge amounts, in ginormous amounts with a lot of leverage.
Yeah.
So they were buying every time prices hit 120, and the S&B was basically sponsoring the hedge fund industry.
Yeah.
So at some point
That's
in
a nice way
time, we decided to let that go, and the result was this
gigantic move.
This black swan day in currency markets that wiped out a lot of companies.
This is you think you've seen a massive moves during the financial crisis and during the height of the pandemic, but this was like massive in percentage terms. It was a huge move. A lot of people got into trouble who are buying the Anyway, the point being is that we are the franc is getting more expensive, and that's not good for the economy of Switzerland. So the Swiss
has a history in the currency market.
Yeah. So might we see that bullish breakout eventually before we move on from this?
Well, this is the same deal, really. I mean, the dollar Swiss franc is trading rather in line with the dollar index. So there's we're just waiting for the elephant in the room named Jay Powell to say what he has to say.
Okay, let's have a look. Now, before we wrap up on the FX markets, is there anything else? Any questions from the attendees in this webinar? If you have any questions in the FX markets, please raise your hand.
All right, so let's have a quick look at gold and silver and oil and wrap this up then.
Sure.
So gold, continues to consolidate in a tight range and stuck between a rock and a hard place.
Yeah.
Nothing new here, really. We've been, it's the same game, really. The Fed is going to determine which direction the market is going to go in the next couple of sessions.
At least in the next couple of sessions, yeah.
Yeah, and we're seeing it would be very curious for me at least to see what's the positioning here. Are traders bullish or bearish on gold?
Yeah.
I have no idea. But anything, whatever you do, it's really dangerous around these levels. So you wanna see tests of recent ranges and look for entry levels around those extremes. Placing a gamble in the middle of the range, it's just that, a gamble.
Yeah. So that some people might be asking us, how would you get on board. And that's what, one of the ways that you can do it, as Victor mentioned, is ranges. For example, if you're bullish on gold, maybe at the lower end of the range, looking for longs there would make more sense if we see a massive crash into that level. Alternatively, you can wait for the market to show its hand. Okay, so after the central bank meetings are over, you get plenty of chances to potentially buy or sell gold at support or sell at resistance, etc. So, for example, if you get a move higher in response to the Fed meeting, then eventually it will pull back. If it doesn't, it will go into a consolidation or whatever. You can then get on board on those pullbacks, or you can zoom into a smaller time frame like the hourly or something, and then buy on the back of that or sell on the back of that, depending on which direction it breaks. So if it breaks to the upside, then any rounded retest of 1787 to 90 area, which has been key resistance, is going to potentially turn into support, offering a bounce trade potentially to 1830, which is resistance, and possibly beyond. That's the bullish scenario for the bears. If we get a clean breakdown below this green area, then any retest of the zone could offer a decent selling opportunity to take us all the way down to the range lows around here. So those are the two scenarios. Just wait for the market to make its move before getting on board. Ideally, after the Fed meeting is out of the way.
Same picture with silver?
Yeah, absolutely. Silver is, where is silver? I'm looking at silver, but I can't find it. It's somewhere here, I promise. There you go. Yeah, silver is looking a little bit more weaker because of the ongoing risk-off trade at the moment. Yeah. This shaded region is the key point, I think, key support or resistance area that either needs to break for the bulls or hold for the bears. If it holds, then I'd imagine we could drop to possibly 20, maybe lower. Because that level is massive, isn't it, in terms of the historical?
Historical. It's totally feasible. I feel like, if the Fed surprises the markets, I mean, I don't know what's the probability. Do you have any idea what are the expectations on part of market participants for tomorrow? Like, what percentage of people expects the Fed to accelerate tapering?
I would imagine a higher percentage of people because of the language that Fed has used. Probably,
I would feel the same.
Yeah. So the bigger move would be if the Fed doesn't taper at a faster pace, right? So that means the dollar could weaken.
What if they taper at a faster pace and say rearrange the dot plots and imply 3 rate hikes for next year? Ouch.
Oh, that would be ouch. So that's a possibility, of course. I suppose we just have to wait and see. There's no point speculating too much ahead of it because it's going to be moving the markets quite sharply. And what is more important than the news itself is how the markets react for traders. So even if the Fed, for example, is as hawkish as they can be, if we see the dollar weaken on the back of that, maybe after an initial spike higher, that would tell you that the dollar has bottomed out. Conversely, if it is dovish and the dollar still rallies, then that will tell you that the dollar is going to go much higher. So watch how it reacts. The news is obviously going to be important, but the reaction is even more important. And on that bombshell, if it is a bombshell, I think it's time to conclude this webinar because
time to wrap this up. We've extended this webinar too long. The only conclusion that you can make from it is Wait for the Fed before you place your trades.
Or be very short term and trade very small if you're trying to preempt a move in the markets. Yeah. So don't take too much risk on. That's the bottom line. Take care, guys. We'll see you next week, hopefully.
Take care. Good luck. Bye-bye.